It's Wednesday, August 10th, 2022. Lots to talk about today. I want to start by saying this. We are going to print a lot of money in order to get inflation to go down. Think about how stupid that sounds, but that's exactly what they're planning to do. We've got the new CHIP Act. We've got the new Corporate Stimulus Act that's just been passed. This is going to be in excess of $1 trillion of borrowed and printed money that will be coming to the economy very, very soon. I don't know about you, but I don't think you need to be a rocket scientist to figure out that this is going to produce much more inflation. Markets across the board skyrocket today. Dow Jones closes up in the green, 535 points. The NASDAQ up 360. An incredible day for Wall Street, looking for any type of good news, and it got some today. And we're going to talk about the CPI numbers that came out. But before I do, I was watching one of the business channels this morning, and the host was saying that we need something to really kickstart this economy. And I said to myself, what economy? What economy does the US have now? We make nothing, we produce nothing. We have an economy based on consumption. 70% of this economic GDP right here in the US is based on consumption. It requires that you continue to buy stuff with money you don't have in order to continue to exist. Otherwise, this economy will perish. Think about that. We have an economy where we don't produce, we don't manufacture, we consume. And we consume with money we don't have, with credit cards and buy now, pay later plans and personal loans and what have you. And we are consuming items that aren't even made here in America. They're made in other parts of the world, mainly Asia. I don't know how things cannot get worse when we have a country now that is so reliant on the printing press. There's no way that they're going to stop inflation now, in my opinion. I don't know how many of you even believe the numbers that we got today with CPI and core CPI. We'll talk about that in a moment. But are these numbers even accurate? Are they real? I don't believe they are. Do you believe that we have 3.5% unemployment in America? Do you believe that the CPI is 8.5% like we were told today? Do you really, really believe that? What's the real number? Comment down below. I believe it's probably 17, 18%. Many of you will say it's much more than that. But let's get into it here. Consumer prices rose 8.5% in July, less than expected as inflation pressures ease a bit. Now, that number was expected to come in at 8.7%, but we got incredible news today. It came in at 8.5%, and that's all the markets needed to rally and to soar. Now, we had Fed Evans, the Federal Reserve Evans, who I believe is out of Chicago, out of the Chicago Federal Reserve. He says rate hikes will continue this year and into 2023. Economy can handle it. Again, I ask you, what economy? The service sector economy, where half of Americans are working now, an economy where people are making low wage, minimum wage jobs, where their wages are being destroyed by inflation, where there is no opportunity now in a majority of the jobs in America, where it is difficult to get a 40-hour work week, where it's difficult to get benefits. And this is what they call a healthy economy. I do believe they're going to continue to raise rates, and they're going to justify it with numbers like this, telling us that, hey, look, it's working, inflation is coming down. And isn't it great news? Inflation, ladies and gentlemen, inflation now is only 8.5%. Are your wages going up 8.5% year over year? I highly doubt it. And let's not forget, we all know that the real inflation is double what they're telling us. It's around 17, 18%. Core CPI was actually up 0.3%. And we are now at 5.9% year over year. I believe that was the same as last month. Now this excludes food and energy. This is the price increases that we're seeing in services. So that's not good news. So we have core CPI at 5.9%, and we have CPI at 8.5%, and wages are not keeping up with either one of them. Grocery store inflation rises to highest since 1979. Milk, cereal, chicken, cheese, butter, hamburger, and bread prices still soaring. 13.1% year over year. And in this article, and I'm just going to go through a little bit of this for you, service categories where CPI rose year over year. Let me know if your paycheck, if your wages are keeping up with this. Health insurance year over year is up 20.6%. Rent is up year over year 6.3%. Auto insurance 7.4%. Delivery services 14%. Airline fares 27.7% year over year. Service categories where CPI actually fell. Telephone services unchanged. Car and truck rentals are down 11.9%. And admissions to sporting events down 2.7%. Isn't that wonderful? That should save the economy. Now, if we look at food categories year over year, cereal products are up 15%. Beef is up 3.4%. Poultry, 16.6%. Fish, seafood, up 8.7%. Eggs, unbelievable. Eggs are up 38% year over year. Dairy and related products up nearly 15%. Fresh fruits are up 9%. Juices up 12.9%. And coffee up 20.3%. Absolutely incredible, the cost now to feed a family, to put gasoline in a car. It's absolutely incredible. And this service sector economy that we have is going to be the demise of the U.S. economy. The average worker today cannot keep up with the price of housing, rent, gasoline, auto prices, food prices. We are going to see multiple things breaking very, very soon here. U.S. consumer price inflation slows in July. Real wages continue to tumble. This on the Hedge today. Now, in this article, there was a very extremely important thing to understand if you read this article. And it makes a point here, again, that I think is extremely important. Real weekly earnings continue to plunge, now down 16 straight months as inflation eats away at wage gains. Think about that. Weekly earnings continue to plunge, now down 16 straight months as inflation eats away at wage gains. People are not going to be able to keep up with this. But the good news is inflation is only up 8.5%, not 9.1%, or the estimated 8.7% that we were told we might see today. So it did better than expected, but think about that, 8.5%. This is still near an all-time high. And if you take into account real inflation, we are still at an all-time high with regards to inflation in the U.S. Going back to what I said earlier, the Fed president of the Chicago Federal Reserve, I believe it's the Chicago Federal Reserve, Evans, says Fed will likely raise rates into next year to curb inflation. How about this? Kashkari says softer inflation data don't change Fed's path. Inflation has eased, but is unacceptably high, Evans says. So it does not look like they're going to take their foot off the pedal with interest rates. And this is going to be extremely bad for the U.S. economy. But they're so far behind. They've been so dovish and just not nearly aggressive enough to stomp out inflation. It is going to continue to be a big, big problem with the U.S. economy. And these small incremental rate hikes are really doing nothing except hurting the middle class, the poor, and the US economy. At least if we got super aggressive, we would feel the pain, we'd probably go into a depression, but we would stomp it out much quicker than what we're doing. This is literally a death by 1,000 cuts now, and we're just watching the implosion or the dismantling of the US economy in slow motion. My opinion. Here's another article today. This comes from Fox Business. Home buyers dial back amid affordability issues, shaky economy. Now, we added 528,000 jobs in July. Why isn't the housing market booming? You would think with all these jobs, over 500,000 new jobs in July, that we'd see an uptick in housing demand, in purchases. Overall mortgage demand rose 0.2% from last week. Activity has now fallen in 5 of the last 6 weeks, according to this article, as buyers remain on the sidelines due to affordability issues. Well, yes, when you're working one of these service sector jobs, when you're making $7 or $10 or $12, depending on what state you're in, you're going to have a very, very difficult time buying a home. We see what's happening in the auto industry and how many people cannot afford the cars that they bought. We see now how many people are food insecure in America, meaning they don't have enough food for themselves, for their kids. And this is a country now where we are sending billions of dollars overseas, where we are giving billions, literally $1 trillion in corporate stimulus. How much of this is going to help you? And the markets were on a tear today, no doubt about it. NASDAQ way up, Dow way up, they're all way up. Has this helped you in any way today? Did this cut your bills down at all today? Has this made your life a little bit easier today? Is there a little bit more comfort knowing that the Dow Jones was up 535 points today? Did this help you in any way? Again, this is the detachment of the stock market and the economy. Most people live in the economy, the real world, and we have a handful of people making some money at the very, very top in these markets. But I sit here today, and I will tell you this, these markets are on borrowed time, and they can go up, and they can go up, and they can go up, but they are on borrowed time. What they are doing right now is so dangerous. The money printing, the buying of bonds, the buying of stocks, the printing of all this money for this corporate stimulus package. This is going to be letting off a nuclear bomb on the US economy, and eventually the stock market, the debt market, it's all going to come tumbling down. We know that the housing market is beginning to shift, and it may just be the housing market that pulls the stock market down. But we're going to see, I think, some really incredible events take place, and the stock market is not going to be immune to the devastation. It may be the last thing to go down, but it is going down. Refis are more than 80% lower than they were a year ago. You know, a lot of people compare what's happening today to 2008. I think those people who do that are really underestimating the severity of this economy and how bad this economy really is, how damaged it is, how diseased it is, and how it is decaying right before our very eyes. Do not underestimate how bad things are. There's a lot of people that write me. There's people I know personally that just think that they're alone, that they're the only ones that see what is happening. They're the only ones thinking ahead. You know, I think that this is literally a chess match. People are trying to get rich quick. They're going to take huge risk in these markets, and most of them are going to lose. And in a chess match, you've got to be 2 moves ahead of your opponent. And this now is a thinking man's and thinking woman's game. You've got to be 2 steps ahead. This is going to be a long, long match. This is not a sprint. This is a marathon, ladies and gentlemen. You must be exercising caution. You must be exercising patience. I had a friend of mine write me today, and he goes, "What do you mean by keeping your powder dry?" My friend Clint. And to clarify, keeping your powder dry is keeping your cash on the sidelines and keeping a cash reserve and getting ready to take advantage of big sales. Because we're going to see a big downturn in the auto market, in the housing market, commercial real estate market, the stock market, you name it. We are going to see huge discounts coming. That doesn't mean it's going to happen next week, next month, might not even happen next year. It could be 18 months away. It could be 24 months away. It could be 2 months away. I don't know. But the more time I have, and I'm taking time as an asset, one of the most important assets we have, use the time now to save up as much cash as you can and make sure you're diversified, that you also have some gold, you have some silver, you have the food, you have the water. A lot of people I see in the comments going, gold's not going to save you, silver's not going to save you. I've never said that you should only have gold or silver. Number one, you better have security, period. You better have food and water, secondly. Then you better have some gold and some silver. Make sure you have enough gear across the board that you would need, barterable items, etc. But what is going to happen, things are going to collapse, there's no doubt about it, but what happens after the collapse? You cannot take a can of beans or a bottle of water and go buy a property. You're going to need real money. And this is my opinion, not financial advice. My opinion here is, I believe that gold and silver are going to be the real money, that you're going to need this after this reset occurs, when the dust settles, when we get to some type of cool down and we have some new established monetary system. I believe gold is going to be very, very important. I believe gold globally is going to be the standard, that we're going to see currencies globally, some of the big ones, at least making up a percentage of those currencies. It may not back a currency 100%, but it may back the yuan 25%, 20%, 30%. I think it's imperative that you own some of this stuff, because when the dust settles, like I said, you can't take your emergency food or a can of beans and go say, I want to buy 100 acres. I want to go buy that house. I want to go buy that duplex or that triplex. No, you're going to need real money. You're going to need real assets. So yes, have the food, the water for now, but you're going to need something for afterwards when the dust settles. And again, you better have security, because if you cannot protect your can of beans or your bottle of water, your gold, your silver, or yourself, somebody is just going to take it. So I cannot be more adamant about being able to protect yourself. Don't rely on the system. Don't rely on the police. You must rely on yourself, and invest in yourself now. Make sure that you are an asset. Make sure that you have a skill set. So keep your powder dry. Make sure that you have cash on the sidelines, because you're going to want to jump into the stock market at some point. You're going to want to jump into the real estate market at some point. You may want to buy an RV. You might want to buy 10 acres somewhere. You might want to buy a small farm somewhere. You're going to need cash. You're going to need gold to do this. So I'm going to leave it there today. Again, as I leave you today, how many of you believe these numbers? How many of you believe the CPI, 8.5%? It's still a devastating, it's a terrible number. Most people are not going to be able to survive much longer with 8.5% inflation. But the reality is, it's really 17, 18, even 20%. And the average person is in big, big trouble. And many people right now realize that as they're getting their cars repossessed, as they're being evicted, as they're falling behind on their mortgages, as their small businesses, as they're not paying rent. These are all warning signs to you and I what is coming. If you believe that the same people who created this mess are going to fix it, you're going to get what you deserve.